Welcome back, guys. Um, okay, so in this session, I want to talk a little bit about flag structures and and just some basic observations surrounding the flag structures. We're going to follow the usual kind of format of these discussions. So what I'm going to do is I'll cover the theory first on the board and point out to you the observation, and then once we've pointed out the observation, we can look at a few chart examples. Flag structures themselves are very common structures that appear on charts, and you get them occurring on multiple time frames. You'll see them form M1, M5 on the 15, 30 hourly, 4 hourly, and the first thing which I want to point out is that I prefer the flag structures on larger time frames. I prefer the flag structures on larger time frames because they tend to give you more opportunity to profit, right? So if you have a flag which is forming on a 5-minute time frame, then more than likely what you're going to find is that, for example, that range that the flag forms in might be a 20 pip range. Okay, it might be a 20 pip range, maybe a 30 pip range, but that same structure forming on a hourly chart or on a 4-hour chart might give you a 100 pip range or a 150 pip range. And so if you're playing this or if you recognize the structure on an hourly or on a 4-hour chart, then the move tends to be a lot more significant, right? And it does allow you to define your risk a lot better. So you're risking a smaller number of pips with potentially a much larger target. Whereas if you're trading it on a smaller time frame, you tend to be risking the same number of, rather than having a larger target, you end up having a smaller target. And so on a smaller time frame, typically you're going to get an RNR of maybe 1-to-1. You end up risking 15 to 20 pips, looking to make 15 to 20. But if you're playing it on an hourly, you may be risking 20, 25, but you're looking to make 80, 100, 150, and to capture a much greater part of the range. Right? So I prefer looking at the structure on a larger time frame rather than a smaller time frame. But in terms of the formation, the buyer and seller behavior inside of that flag, they tend to be fairly similar, and in terms of visually how the structures look, they tend to look the same, right? So what is a flag? I'm just going to kind of draw the basic. I'm going to draw the basic structure for you. I'm going to demonstrate this to you in a falling market. My eye tends to pick up the flags much better in a falling market than it does in a rising market, but they kind of apply equally, and I'll show you examples of both on the chart later on. But typically, what we're looking for before a flag structure forms is that you want to see a fair bit of momentum, right? And following the momentum, you're going to get a little consolidation, and following that consolidation, you're going to get greater momentum. And the flag structure is about retracement, right? And usually, what it's identifying in terms of buyer and seller behavior is that you have people exiting the trades, and then you're getting small retrace, and people are getting back into the trade in the direction of the trend, and so on. But usually what you find in terms of the price behavior is you get your pullbacks, and the price starts ranging, but every pullback seems to be getting deeper, right? And what that allows you to do is to draw a trend line under the price action, and once you've drawn that trend line under the price action, you're usually able to copy it to the top of the range, right? And you have your flagging structure. So how the books typically, how the pattern books typically describe flags is that you have your pole, you have your flag, and when the flag breaks down, you're looking for your continuation trade, right? This is the that's your kind of basic flag structure there. And I suppose if you're going in the other direction, you'd be looking something like this, and then for your continuation trade. North. What I find interesting and what I want to focus on is actually what does the price action look like inside the flag, right? So often it's easy enough saying, oh look, it's a flag, it's a bear flag, it's a bull flag, but what I tend to find is that if it is a flag, then you tend to have a very particular type of price action. You tend to have a very particular type of price action inside the flag. So that's the first thing that we're going to be looking on the chart in terms of what does that price action inside the flag look like, right? Because what you will find is that that price action is repeating and those structures repeat, and they tend to have fairly similar formations. They don't tend to look a heck of a lot different from each other when they do form. All right. The second thing that we want to look at is entry, right? And how do we take entry? And again, before we look at a chart, I want to cover the kind of theory side first. And so first off is that if you recognize that the structure is a flag, right? So once you've seen that structure forming, and the structure looks consistent with the type of structure that you would expect to find in a flag, then you need to maintain a bias which is consistent with the trend, right? And ordinarily, what I would be looking at the last consolidation area. I would be boxing off that consolidation area and saying, you know what, if the price ends up breaking above that consolidation, then I've got cause to be exiting this trade. And the closer that the price gets to that consolidation area, the stronger in the case of this example, my bearish bias, the stronger my bearish bias is going to get, and so I'll be waiting for those pullbacks to sell. If I recognize that there's a flag formation going on, and one of the things which is very common in that flag formation is that you usually get a pullback towards that last consolidation area. So if you recognize that the price is actually flagging, it does give you the opportunity to play long. It does give you opportunity to play long scalping trades as well. But you need to keep a very clear perspective in your mind that you're not looking to ride that trade for hundreds and hundreds and thousands of pips. Rather, it does have a limited price objective toward the upside, and you would keep on taking your profits consistently and waiting for that, just waiting for that structure as a whole to play out. So it does give long scalping opportunities, but the net bias has to remain with the trend, and the trend will be defined by the direction of the momentum preceding that flag formation. So in this case, we can see, or in this example, we're clearly showing a bearish momentum, and we would keep the net bias in that direction. Now, if you've recognized that it is a flag formation, right, then you can be selling anytime the price is, you can be selling any of those rallies as the price approaches the previous consolidation area with your stops above that consolidation area. And so if the price were to break above there, you're wrong, right? But what will happen at some point is that you'll see the price break back into the general body of the flag. And actually, what we're looking for is for the flag to break down, right? And I think a little bit of this discussion and a little bit of this presentation is actually going to be loaded because of one of the charts which I'm going to show you, which seems to be actually playing out right now. And I'm going to discuss some of the nuances, but the main issue is that we're actually looking for the price to break down from that flag. and we're looking for a continuation. We're looking for a continuation trade out of it. When that flag breaks down, you have two targets, because flags breaking can fake out, right? This is something, again, very important to understand. You get a flag, the flag breaks, but it's a fake out, and the result of the fake out is, in this example, you get a thrust back north, and it would be acting as a bear trap, catching a lot of people out. So when you have a flag, there's actually two targets. The first target becomes the base, of the pole, or the head of the pole, and so that is the first area that you would be looking for price to be reaching. And if price is able to breach that level, then you would be looking for a substantial continuation to the downside. Usually people talk in terms of measurements, and they say you should look for an extension height-wise, right? So if, for example, if the pole is 100 pips, then from the flag break, which would be that area, you'd be looking for an extension of around about 100 pips, right? So it'd be like an ABCD, but you measure the CD from the level at which the flag line breaks, right? So that's your basic flag structure. In terms of nuances on this flag structure, what you will usually find is that when that flag structure is forming, and when the flag line is about to break, what usually tends to happen is that the price comes down, it will breach the flag line, okay, and usually that first breach tends to be a little bit of a false break. The price will break back above, and when I usually see that structure, I get a little bit excited, because in my mind I'm usually left thinking, you know what, the sellers, they were testing the waters, and it's a little bit like dipping your toe in the water and just finding out if it's the right temperature before you jump in the pool or stand in the shower, or whatever instance you dip your toes in the water, in wherever that analogy applies. But it's a very similar kind of thing going on, right? So what you find is that the sellers have gone in, they've gone and tested the waters down there, and then you're getting a pullback. And then if you see price breaking down again, what that allows you to do, and this is important from a trading perspective, because this theory and this trading, and when it comes to trading, what we're trying to do is define risk, and what that does allow you to do is to place a stop above the high which is established, and the price is now again below the flag line, and so you're saying, okay, this time I'm looking for a follow through, right? And so you're looking for a follow through to the first target, and if the price is able to break the first target, you're looking for quite a substantial follow through to complete that ABCD extension in terms of reaching a pip target. All right, so that's your basic flag structure, and so, like I said, we want to take a look at what it looks like inside the flag. That's going to be quite important, right? And then as well, we want to understand some of the nuances. That's very important. And so this is the first issue. Yeah, so it's the flag itself. What I'm going to do is I'm just going to take a quick capture of this and post that to you. You can put that in your pattern books or in your recycle bin. It just depends what kind of mood you're in, right? But that's the screen capture right now. Now the second thing which I want to talk about the flag, and this is something which I find actually way more interesting than I find it way more interesting than the flag structure itself, right? And way more interesting than trading the flag itself. But if you have, for example, a flag formation, and you're able to kind of mark that off, okay? What I find really interesting is that if you've had the price come down and flag, and the price breaks down, usually the angle of the flag line is a very significant angle. All right, it's a very significant angle, and I like to play around with trend lines a lot. I'll play with lines a heck of a lot, and usually I'm kind of looking for I play with them, and I'm looking for the relationships between a line, the angle of that line, and price, and the relationship of price and that particular line and that angle, right? So what I'm usually doing is I'm taking that line and I'm copying it around the screen, but I usually find the angle very significant, so I will copy that line and I'll copy it around the screen. And for example, if we've had some consolidation, or we've had, or you get a little bit of a spike high, I will copy the line to that level. And usually, what I've found is that the line is very significant. And if you ever end up getting a pullback toward the original flag line, right? So you had a flag, the price broke down, and you got a pullback toward the flag line. Then you will find that that flag line is going to act as a very, very significant resistance level in this particular instance, right? Sometimes it turns off early, but anytime price is approaching that flag line, then you can expect a very reasonable amount of resistance at that particular level, right? So even if you've identified a flag after the effect, right, and this could be a week, it could be even a month, sometimes it can even be 2 months after the effect. So a flag formed, you've seen the price break down, you need to be alerted to that structure, and it usually helps to mark the flag line on the chart, particularly if you can see visually that price is pulling back towards the area, because you can be fairly guaranteed that you're going to get a resistance at that level, right? And you know, I never use this word guaranteed lightly, right? It's as about as close to deadly as you're going to get, right? So these flag lines are very important, and you should always be aware of those structures and always be aware of the flag line. I don't always keep them on my chart because visually you can see where they are, and then if price is heading in that direction, I start marking them up because I'm saying, well, there's a flag there and it looks like price is reaching that kind of proportion, so I'll mark them up and I say, okay, you know, it's still 100 pips away or still 150 pips away, but I keep it in perspective. Sometimes they can be traded as targets, but I like playing the pullback toward those flag lines. And I mean, you can see it's not your traditional trend line break and retest, because the line is heading in the opposite direction. But if that line is based on a flag, then it's going to be a very, very significant line. Okay, turning towards the charts. So I'm just going to pull out a few examples for you. First off, if we're looking at GBP USD, all right, and I just want to demonstrate to you the relationship that you have, with the flags and the lines and so on. But here we've got a very kind of clean example, and I like this because it's very clean and it's quite easy to kind of see the structure that I was talking about. So looking here at an hourly chart, and this is a flag formation. Sorry, excuse me. This is a flag formation that played out over the course of a few weeks. So we can see we had a clear downward momentum. Price went into consolidation, followed by extension of that downward momentum. And then if we're seeing that price action, it starts flagging back before eventually breaking down, right? So very clean, clear kind of flag structure there. And if I just mark that up, as a flag, you can see how that structure ended up playing out, right? So when I see price moving like that, right, and it becomes very, very kind of easy to recognize, and as well you have that consolidation area, All right, so you're getting what looks like a pullback channel, right? So it's just the price has been falling, but now you got price channeling upwards. That's effectively what it looks like on screen. And if I drop down a time frame, it should become a little bit easier to see. What I'm going to do is I just want to mark up the actual flag line on this, right? And I want to mark up two lines representing the flag. This is the first line, and okay, this is the first line, and this is the second line. So I've marked up the flag, and if we're looking at price, on the follow through, it pulls back, pulls back, pulls back, pulls back, pulls back. The closer it gets, the closer it gets toward that flag line, the more significant kind of a retrace you're getting on the follow through. So we haven't come here and quite tested that flag line, but what I'm going to show you is if we take that line and if we copy it to the next consolidation block, which takes place here. So you can see we had a little swing there, right? So we just copied the line to the top of that swing. That starts getting a little bit more interesting now, doesn't it? Right? Just starts getting just that little bit more interesting. Like I said, the angle of this line is it really never ceases to amaze me. But you could copy that line all over the place, and what you'll find is so the line was drawn here, right? And you've got the same line, you've got the same angle line which is holding the price as the price retraces, and then you start getting a retrace on the or you start getting a breakdown on the break of that line, right? So the angle of that line always seems to amaze me, right? That you can copy it around different parts of your screen, and you'll always find the angle which you've taken off of a flag line as being very, very significant, right? But a nice clean example of a flag here on GBP USD. And just one of the nuances which I wanted to mention is that usually inside of that flag structure, you tend to get what happens is you tend to get 3 pullbacks, right? So it's like 1, 2, 3, right, before the flag breaks down, and that's something which is quite important. It's quite consistent. You'll notice it within the frame of that flag structure. Okay. All right, just going to turn towards another example, Euro USD. Right, we have a couple of examples on Euro USD. So, okay, the first one that we're going to look at is the flagging structure which we have here. And again, what you're looking at is the price breaking down, going into consolidation, and breaking down again. The consolidation marks the marks like the resistance block. So if the price were to break above that consolidation, you would consider that the overall price structure has changed. And in terms of our flag line, again here, very, very kind of clean flag line. Okay, and again you can see the kind of erratic break that you had above the flag, right? So you've had 1, 2, 3, and then the price breaks down, but this flag line being key. And if you're looking, what happens is the price breaks down, again pulls back towards that flag line, and you're getting your extension, right? So so again, very interesting kind of formation. When you see that flag breaking down, the pullback towards the flag line tends to be quite significant. Sometimes you'll have that happen straight away, like in the example here. Sometimes it could happen after a long time, like the example that we had on GBP USD. But whenever you get a pullback to that flag line, it does tend to be very, very significant, and you ought to be looking at that flag line to be acting as resistance. All right. Now, what I'm going to do again is I want to take the flag line here, and I just want to extend it. So let's just get it to the, let's just get it kind of exact here, and I'm going to take a second line as well, just based off of this flag to where the price pulled back. Okay, so again, what you're seeing is that if you're drawing trend lines, right, and so whether it's a support resistance line or whether it's a line actually taking, I didn't actually hit below that. There we go. All right, so it tends to be a very, very significant line, right? And so once you've had a flag breakdown and you're getting a pullback towards that flag line, you ought to get just a little bit excited, right? Because it's going to be giving you a trading opportunity. And the closer that the price gets to that flag line, the more likely it is. In this example, we've used it. We're using it as resistance, and so you can see how it acts as resistance. Right now, I'm just going to show you a bullish example on this. I'm going to show you a bullish example on this same chart, and it's not a cleaner structure. So I like them when they're like this, right? Where it's very kind of clear. It's flagged. So what you've got is your boost, consolidate, boost, and you get the price flagging in that second, inside of the range of that second boost, right? That's essentially what that structure is. That's how you would describe it. But if you wanted to look at a bullish example, we have a structure here. We have a structure here which flagged. Right, and again, you can see that when the price broke through that flag pullback, it was able to give quite a. I'm just going to zoom in so that you can see that a little bit more cleanly, and maybe just. All right, so what we had in terms of structure was that we had the price break. You had a little consolidation, and the price broke higher, right, and it's not as clean here. Sometimes you are going to get these kind of messy structures, but if you're looking at the overall price structure in that second, inside that second boost stage, you get that flag line forming, and eventually the price broke through. When the price pulled back, you did get a significant bounce the first time. We had an overthrow here, but if you were using that line to establish bias, you'd get back in once that overthrow had completed. And you end up with a significant push north until eventually we retested that flag line again, right? So, example there of a bullish flag, not the cleanest example, but like I said, the bear ones I tend to find them a lot easier to spot, just in terms of the way that the price structure works with them, and I find myself a lot more familiar with those. Okay, I want to turn towards Euro GBP. Euro GBP, we've been looking at this pair now, and we've been actively trading this pair pretty much the whole of the year. Probably, to date, it's probably, although the range that it's hit has been about 250 pips this year, I think we've probably pulled out in excess of 500 or 600 pips from this pair. Going back all the way to around about the 9th of January, right? But I just want to show you the structure which is forming on Euro GBP, and that structure is quite exciting. Whether we're gonna see a flag breakdown or whether we're gonna see a false break, still remains to be seen. Although my money is actually on seeing this breakdown, and I'm still in the mode of selling rallies on Euro GBP, and I'm going to show you why in a while. But here's the kind of overall structure that we have. So we had the price breakdown, we had it go into consolidation, and we had the price breakdown again. So marking off that previous consolidation area, that gives us that gives us our structural bias. So as long as the price is remaining below that consolidation area, our net bias would remain short, and we would only start looking north if the price is able to break above that cluster, heading into that kind of 86, 87 area. And at that point, we'd have cause for concern and say, okay, maybe we ought to be buying a pullback now rather than to be selling a rally, right? So that isn't something which has happened yet. We have developed a flagging structure, however, right? And that flagging structure, again, like I said, it's quite an exciting structure once you begin to recognize it. We've been playing the range a lot. So in January and February, we played a heck of a lot inside of that range, and we targeted 85 to the upside, and from 85, our target to the downside was to look for a retest of that kind of 82.40 in the first instance, because it represents the extreme of the pole, and if we're able to break through that 82.40, then we're going to be looking for a continuation to the downside. And if we're getting a complete extension, you'd be certainly looking down towards the 81, 80.50 area, right? So so here we have a flag actually in play, right? And I just want to remove now the capture and actually chart it with proper lines. And the line that I'm interested in is the one that represents the base of that flag. Okay, and if we're looking at the overall price structure now, as I mentioned previously, you are going to get that instance where the sellers are going to test the waters below the flag line, and this is exactly what's been happening on Euro GBP, right? So they've tested the waters below the flag line. Now we have a couple of options here, right? We have a couple of options here, and there's a couple of ways to play it, right? So you could wait for some kind of rally to take place, right? And it's entirely possible we could go for another kind of retest of that kind of 84.20 area, right? And I wouldn't entirely write it off. In fact, sorry, I've just noticed something, and I want to mark it on my chart. So we've had a little bit of a flag break here as well, right? So, okay, we've got a smaller flag inside of a bigger flag, but it's okay, right? It's worth marking that level. Okay, so how we would play this is that you could allow it to rally, and any kind of rally you could do blind sellings. Selling blind, looking for the most recent kind of resistance area to hold. So in the first instance, we'd be looking around the 84.40 level for a stop, and then after that, we'd be looking at about the 85.30 level for a stop if the price were to break higher than that. Or you could wait, right? And you could wait, do nothing, but what we'd be waiting for is for the price to break back down and break back under that flag area again. Right, and so if we see the price break under the flag area, whatever the high is, where the price, where that momentum began from, right, and if there's some structure in there that allows us to define risk better, we would do that. But if the price breaks below the flag line again, particularly if it breaks and you see consolidation beneath that flag line, that will give you a very good risk-defined entry to be taking that short and trading that flag, right? So that is the style in which you would take that entry. Right? Say, if you want to be aggressive, you say, okay, I'll keep selling the rally until this flag breaks, right? And that would be a very aggressive trade, because, like I said, you do have instances where the flags fail to break, right? But if you want to be conservative, you would say, okay, we've tested the waters, let it break below that line again, and if it breaks below the line again, I'm going to look for a significant follow through, right? So, so that's the play on Euro GBP. Like I said, it's very exciting because the last few times when we've been looking at various structures, we didn't have very many live examples to be looking at, but it'll be very, very interesting to see how this plays out over the coming over the coming days, and I would suspect that by the end of this week, or certainly by the end of this week, by the end of this month, I would be looking for that 82.40 to be retested at least, right? I would be very, very surprised if that price area were not to be retested, and if that structure there became a trap for the sellers. If it became a bear trap, I would be very, very surprised at that, right? So I'm looking for the price to break down now. My own kind of personal tendency on Euro GBP is that because we've got so many pips in the bank from it, I really don't have a problem selling those rallies, and I've been quite aggressive with it. I've not had any trouble kind of fading the levels and fading entries on this, but like I said, there's two ways to play it. You can fade it. You can be quite aggressive and randomly sell those rallies, or look for a technical entry inside of the flag structure itself. Or if you want to be a bit more conservative, you just wait for it to break down, and once it's broken, then you're looking for a continuation trade. Okay, John. So it's a flag like a BCB, but boost, pullback, channel, flag, then boost. Yep, that's right. Yeah, so that's exactly the structure. And you know, it's like I said, you know, regardless of the time frame that you're looking at, regardless of the time over which it plays out, right, as well, you tend to see that same similar structure. And I like these ones which play out over a longer time frame. I like them because they give you much more opportunity to trade, right? And as long as you're using that previous consolidation area to determine your net bias, you don't have a lot of, you know, you can maintain a lot of confidence in the direction of the break that you're looking for. Okay, that's the that's the important kind of thing with this. So we're looking at a big structure here, but we used that consolidation range up in the 85 area to establish our net bias south, and so it became a lot easier. All right. Okay, question about dollar Swiss. So let's have a look at dollar Swiss. All right, that's pound Swiss. We don't want to be looking at that. Yes, right. So again, getting that very kind of messy structure, right? And it looks as though Layman, you've got a very good eye for this stuff, right? I was watching your charts this morning. Okay, so if we look, we've got our BCB structure, right? And that consolidation itself is a little bit messy, right? But the only thing which is going to change our mind about what's going on here in relation to dollar Swiss is if the price is able to break above that last consolidation area. And so as long as price remains below this consolidation area, technically would be looking for a short. If you're isolating your flag structure, you're probably looking at that as being your flag line, right? So if we see the flag break down, that will put us into a good continuation trade, and would take that as a conservative entry, using the breakdown of that flag. And if we wanted to be more aggressive, would be selling up here in this consolidation block, somewhere between 91.50 and 91.80, right? But that does look like a good flagging structure, and if you see it breaking down, you may even be in a mind to get in a little bit more aggressively before the flag line actually breaks, right? But it does look like a very good example of a flag breakdown, right? Spot on, well done. Okay, guys, that's it from me in terms of the session this morning, and I'll catch up